There's a problem with Solana that I conveniently ignored, and that is how much more risk on it moves relative to the general market. At the bottom, we see total 3ES, the altcoin market except Bitcoin and Ethereum and except the altcoins. When the altcoin market in general is going up, Solana is having a good time. When it's going down, Solana is having a bad time. And what we see at the top, that's not the Solana price. What we see at the top, that's the Solana dominance. How much of all of crypto is in Solana? In other words, when the market as a whole is expanding, Solana tends to expand even further. When the market as a whole is contracting, Solana tends to crash even further. And interestingly enough, the extent of additional crashes and additional expansions are very comparable to how much the market in general is contracting and expanding. So again, we've got the market cap of all of the risk on assets here at the bottom. They tended to shrink, measured in US dollars by more than 80%. Solana, relative to that market cap, it underperformed by an additional 84%. Isn't that fascinating? So Solana simply seems to be a levered bet on all of crypto despite its size. Now when the movements are relatively comparable, maybe it makes sense to just calculate the ratio. And that's what we've got over here. A very not so common indicator. This now looks at Solana's dominance relative to the market cap of the altcoins. So sometimes Solana is rather expensive, sometimes it's rather cheap. And while it did fall quite a bit in the last few weeks, it fell less compared to what the inherent leverage would indicate, what it would suggest. Let's have a look at the Solana dominance in a bit more detail. Let's look at the recent past. So we've been trading in a range relatively predictably, right? We had our bottoms and our tops, and we've fallen below the support line on the 5th of February and then quickly recovered. So it appears as if we are going further down from here. It appears as if the potential risk is quite large. Here we see the total value locked on the Solana chain. How much of all of crypto is currently in Solana measured in US dollars? And this of course did go down with the Solana price. Now have a look at the TVL measured in SOL. That's actually going up. And that's potentially a good sign because that now tells us that some of the assets on the Solana chain aren't necessarily bound to Solana, that some of it is just stable coins and that a lot of the value might not fluctuate as much as the Solana price itself. Now we can't talk about Solana without talking about pump swap. This is the trading volume on Solana itself in the last 24 hours, roughly 10 billion. On pump swap we had 7.6 billion. So the vast majority of trading volume on Solana happens directly on pump swap. And unfortunately that trading volume does not look natural at all. There seems to be a lot of bot trading, a lot of wash trading, and that's inflating the numbers for Solana by at least those 7.6 billion. The trading of pump swap related tokens creates some burning mechanism for the pump token itself. 300 million worth of pump had been bought back through the burning, but the pump token still does not outperform the general crypto market. It underperformed the rest by 46%. The average ratio of pump relative to the altcoin market is this dotted line. So maybe pump is slightly oversold. Maybe there is now a price discount of 20%. But when we compare pump with Solana, that discount vanishes. So really, a lot of this is artificial price manipulation. It seems like we have to exclude the pump ecosystem from Solana to get an idea of what Solana is actually really worth. Now, many of the tokens of the pump.fund ecosystem lost pretty much all of their value. This is pump.fund tokens. The largest token is Pippin, which is currently highly manipulated. 80% of the supply is just in the hands of insiders. And then we've got all of those other tokens that are now just in a few hundreds, just tens of millions of dollars. And they used to be in billions of market cap. So let's have a look at all of those other decentralized finance applications on Solana. We've got Jupiter, Camino, Sanctum, Jito, 00 and Radium. Here is their total value locked over time. This is Radium. This is Camino, this is Sanctum, this is Jito, here we've got 00 and here we've got Radium. Really, it doesn't look very nice. All the major applications on Solana, they tend to rather trend down right now. It seems like capital is exiting the ecosystem. And so while this trading range of Solana dominance tended to be very enticing, I did buy this bottom as well and then got disappointed I think now the potential risk versus reward is not worth it. If we fall back down all the way to the lows of the end of 2022, and if we actually enter a bear market in Bitcoin, and Solana is just a levered version of all of crypto, then those kinds of similar losses might just reoccur. I have been very bearish on crypto for quite a while. I'm shorting the market since October of this year. There's even this little bear logo here in the background. I even renamed this channel to Bear Heart at one point. If the market as a whole is going down, then it seems only logical that Solana is going down even more. In the past, it was just a levered bet on the general market. How much further could we fall? The long-term holder realized cost basis in Bitcoin is at $40,000. This is where we tended to see a turnaround after a bear market. If you're subscribed to the notion that we are currently in a bear market and we are looking for a bottom at some point, the long-term holder realized price is probably the first stop to look out for. Before we are at that level, I am not going to touch Solana either, because if Bitcoin just goes down to 40k, Solana is probably going to lose much more. Now, I'm surprised how most people still don't understand how the macro defines everything. When Bitcoin is going down, then all the altcoins go down with it. And while you can try to pick an individual altcoin that might be a winner, that's probably long-term a losing battle. And so really, figuring out where the macro is headed is the most important consideration. It doesn't matter what cryptocurrency it is. When Bitcoin drops by more than 80%, any portfolio gets crushed. And these kind of moves happen regularly. The last time was when Terra Luna and FTX went belly up, a drop of more than 77%. And so it's very clear that crypto moves in those trends. Some people even think that it's 4-year trends, right? 4-year cycles. This might become a self-fulfilling prophecy. I'm not willing to go that far, but there are clearly overarching trends, and I try to time them in a way. The very straightforward way is using moving averages, right? Here, for example, we've got the 200-day simple moving average in Bitcoin. We can bet on rising prices whenever the price is above. We can bet on falling prices whenever the price is below. And so that way we avoid quite a bit of the bear market. The question then becomes, what is the best moving average duration? Should we take the 200-day moving average, or should we potentially go shorter? Maybe it's the 175-day that's better. Maybe it's the 150-day that's better. What moving average duration historically worked the best? Should we maybe take just the 100-day? We're getting closer and closer to the price as we reduce the moving average duration. And it seems to have its advantages, right? We tend to enter a bit earlier when the moving average is shorter. But then we also get this random noise every now and then where you go above and below and above and below the moving average again. So I made a calculation to find out the best moving average for Bitcoin. There are 2 data points that are interesting. The one over here, the 44-day simple moving average. On the x-axis is the moving average duration, on the y-axis is the annualized performance. The black line here is the comparison to just buying and holding Bitcoin. So the 44-day works pretty well. The 125-day also works pretty well. And so this is what happens when we use the 125-day simple moving average to bet on falling and on rising prices. Bitcoin is in white, the backtest is in turquoise. We can even optimize a bit of leverage, so we can go long with some additional risk, but then also additional return. And then this is our long-term outperformance. Every horizontal line here, that's a 10x. So this is a logarithmic chart. We move from this outperformance to this outperformance. So that's for the 125-day simple moving average. The 44-day works slightly better. So there are slight differences. If you don't want to trade too actively, just use the 125. If you want to optimize return, use the 44. Here's the 125-day simple moving average. Here's the 44-day simple moving average. And because trading according to that moving average is quite cumbersome, there's a lot of trading signals, I have created a capital pool to automatically execute those trades. And since we started that capital pool in October of 2025, we are making money, while Bitcoin, of course, went down. So that's the beauty of riding the trends. The outperformance can be massive. The last month's return annualized are 78%. The backtest indicates an outperformance versus Bitcoin of 115% per year. So this is a premium page of this channel of Bitcoin Strategy for automatic copy trading. It's all built on top of a decentralized finance protocol, a protocol that enables efficient trading and leverage and automatic copy trading. Hyperliquid is the largest so-called perpetual futures exchange. And I do think there is some security, at least in numbers. There's already 4.3 billion worth on the platform. And so our 3.5 million are just a drop in the bucket. The capital should be relatively safe. I think it's safer at least than if I was to personally hold the funds, right? All the funds are held by the platform and you can withdraw your capital at any point in time. There is no fixed lockup. And so instead of trying to find the few altcoins that might make money when the overall macro is bad, isn't it better to use approaches that historically worked very well? An approach based on statistics, an approach based on numbers. This is where I put my money and I'm very satisfied with the results. So if you want to co-invest in that strategy, feel free to check out Premium. It's currently $125 per month. You can simply sign up once, deploy your capital and then unsubscribe again. Of course, I hope that you will stay longer because besides copy trading, there's also a lot of tutorial videos that might be helpful for your long-term wealth building. But again, it's not required. If you just want to deploy your capital into the strategy, you can just get in, sign up, deposit your funds and exit again. A link to Premium pops up here on the screen. Looking very much forward to seeing you there. Thanks again for watching. See you next time on YouTube as well. Cheers.